Recently, Intel had its worst day in something like 50 years, falling to a multi-decade low, following a big earnings miss, laying off 15% of its employees. Investors are asking, is Intel stock deep value? I've gotten a lot of questions and comments like that, and recognizing the email starts off like, hey, Daniel, I didn't listen to your last few videos about Intel saying, yeah, it's too hard and it's not deep value, but I'm wondering, I'm sort of bag holding here, am I finally in this sort of deep value territory? So we're going to talk about that towards the end of this video. Let's first go through their results. Then I'll talk about valuation more broadly, how to think about Intel. I'm personally, it is still too hard for me if you want to just jump straight to it. And if you want to know why, I'd recommend reading the book Chip Wars, just because it does provide a good context for every decade. There's a king in the semiconductor space, and it seems like every decade there's a new king being dethroned. So I think that's an important context to understand, in terms of as you think about the semiconductor industry, if something is of permanent value. I do not think Intel is, and it's simply too hard for me looking at Intel. But let's actually look at their results so you can draw your own conclusions. Their most recent earnings reports show declining sales, declining gross margins, declining gross profitability, and losses, sizable losses, going from $1 billion to nearly $2 billion. And oh, by the way, as you get the pleasure of seeing billions of dollars in losses, you're also getting diluted. The number of shares in this pie are increasing from 4.2 to nearly 4.3 billion. So that is not very favorable. Looking at the cash flow statement, you see they did around $1 billion in operating cash flow. That's during the first 6 months of the year. Yet they still managed to spend $11.6 billion on capital expenditures. Now, you might say, oh my gosh, $10 billion in negative free cash flow or cash burn. How can this company survive? Well, that's part of the reason why the stock is doing what it's doing. But investors know that they're getting help from their friends with partner contributions of around $12 billion. So that is offsetting their significant capital expenditures. But if you're an Intel shareholder, I would say you need to explore the terms of that partner contribution capital, because as folks know in the US, if you have the money is never free. Products might occasionally be free, and I'll talk about one free product in just a second, but capital is never or very rarely free. And so if they're getting to the tune of $12 billion in partner contributions in the most recent quarter, you'd want to look up what those terms are. I personally haven't done the deep dive, but I am seeing that, look, these are serious private equity players. They're going to want a nice juicy payoff, like Brookfield Asset Management. They're one of the investors' partners. And meanwhile, they've had their dividend of $1 billion in the most recent quarter. So that's just a terrible look to have that type of cash burn, required capital from partners, and then have that, hey, we're still going to pay a dividend. For a while, I thought that was just bananas. And so not surprising to see that management is cutting the dividend in the fourth quarter. And the third quarter is ugly as well, talking about revenue continuing to decline, over $1 billion decline, gross margins collapsing, 8% decline in gross margins, and continued sizable losses. So I go to AI Ticker Chat, and this product is completely free in terms of the chat features. The premium features, that will cost you. But if you wanted, I personally think this is revolutionary. If you want to talk to AI about a US investment that we cover at AI Ticker Chat, now you can have nearly unlimited chat. It's free to use. So that way you can just chat away and learn about the businesses, saying, hey, what did management say in the transcripts? Oh, what did the, pull from the 10K or pull from the financials and tell me what does it say about this if you want to research it. So I'm showing an example here saying during the most recent call, did management indicate why their profitability was worse than expected? And it quickly calls out, and you can go to the source documents if you're interested, that management did talk about an accelerated ramp up in their AI, artificial intelligence, PC products, expecting that, and they're making a big bet here, that AI PCs will be 50% or more of the market by 2026. So that's just a couple of years versus less than 10% today. By the way, we have a share and win contest at AI Ticker Chat. If you share your conversation on social media, you do have a chance to win one of our premium subscriptions if you're interested. So you can check that in the link below. So yes, Intel is making this bet on AI PCs, and they're saying we're going to be unmatched, we're going to be unrivaled. But the challenge is, and this is why I think it's important to read the Chip Wars book, is not only does it give context that every decade a new king is dethroned, but it does give you the geopolitical context as well, which is that the whole world is currently reliant on Taiwan Semiconductor for the most cutting edge chips. And so that makes the defense complex, and rightfully so, many investors say, hey, I'd like to have something where it's not really threatened by China taking over. And so maybe we should have these most cutting edge foundries that are producing the semiconductor chips in the US or in countries that you trust. And so you've had this shift where they're saying Intel is going to be the one that spends, tens of billions of dollars in the United States to be able to secure that supply line of leading semiconductor chips. The challenge is that their foundries just aren't ready for it. So even if Intel's planning on making this bet to be the leader in AI PCs, they need to have a heavier dependence on external wafers. They're going to have to rely on Taiwan Semiconductor and others to get the chips needed to have this new, AI PCs, AI personal computers, that'll be able to handle the requirements of AI. So you have the CEO, Pat Gelsinger, talk about, here it is. You can see it yourself. This is a direct quote. Let your eyes look straight ahead. Fix your gaze directly before you. Give careful thought to the paths for your feet and be steadfast in all your ways. This is from Proverbs. I think he was a little shaken up by the stock price collapsing. Not really surprising. And so what he's saying here, in my opinion, is he's looking at the different paths in front of him, and he's made a bet, and he's going to be steadfast in it, even if it means you're walking a challenging path, where people are, questioning you and your judgment. And so the question is Intel finally that deep value, given that the stock is now at this point below $20 a share at the time of this video publication? First of all, this is not financial advice. Also, a quick plug. Recently, a premium member of the Unrivaled Investing community shared this, a direct quote. Currently, the profit I've made thanks to called out ideas from Daniel can pay for 30 years of subscription, but the most valuable part has been the learning experience. I've been a very satisfied member since June 2022. Since then, I have never doubted to renew. If you're looking for compelling investment ideas, come check out unrivaledinvesting.com. So around $20 per share, that does suggest a market cap of around $85 billion. That's using the diluted share count. And so I've seen comments from folks saying like, hey, it has fallen so far that it's now around or below tangible book value. That's the value that you'd supposedly get in a bankruptcy. Isn't this now like crazy cheap? What's your take? So I have a whole separate course on valuation. If you haven't had experience, trying to think about valuation before. I'll do a super fast recap though, which is that there's a lot of different ways to value businesses. I'm not going to cover everything here, but you can have an unprofitable growing company, but then you need to think about what could their margins be in the future, and maybe what sort of multiple on that future profit, maybe it's 10 years from now, you'd assign on that business. And there's a lot of assumptions that go into the business model. What are their gross margins? How much do you need to spend on sales and marketing, general and admin? And so that part of that knowledge just comes from reading about a lot of companies. Another way at the opposite end of the spectrum, and there's, you arguably you can make money both ways, not only the unprofitable, growing and assuming a future margin. You can also find businesses where it's like, hey, I'm buying it based on the free cash flow. Maybe the growth isn't as great, but I'm getting a great free cash flow yield. Another way is to say, hey, I'm not so sure about the stability of this business. 1 year it's free cash flow, the next year it's losing. What's the sort of backstop in valuation? Where's the margin of safety? Well, then some people say, oh, you need to look at the liquidation value of this business. And if you can buy it around the liquidation value, then you could get, significant, margin of safety. Then it's a lot of upside because you got the liquidation as support. So it's important to recognize there's different types of companies that warrant these different types of perspectives, liquidation value, book value. So looking at the balance sheet for Intel, to say that this is anywhere near, what you'd get like in a bankruptcy proceeding, that is not the case. And I would argue you don't have a lot of safety in this balance sheet. Let's look at this balance sheet. So total assets, $200 billion. But a lot of that is goodwill, so you need to strike the goodwill. So you're not going to likely get anything in goodwill. This is an intangible asset. Same with this other $4 billion in intangible assets. So that strike that. And, usually the things that you can liquidate near the value you can see on the balance sheet is the current assets. Sometimes receivables, you're going to mark down, 15%, 20%. But everything else, you're like, okay, maybe inventories, you have a 30% markdown. Let's just give them full credit, though, for current assets. I personally wouldn't do that in some sort of liquidation type of scenario. But $50 billion, less total current liabilities of 32, less total debt of 48, you're talking about a negative figure. So that doesn't make sense. Another aspect is like, oh, well, then it turns into how much is the property, plant, and equipment worth? So that gets back to the question of how much and how valuable will those foundries be in the future? So you're really making a bet that you have confidence that those facilities can generate huge economic value in time that can justify this $100 billion position on the balance sheet. So I would look at this and say, no, it's not easy to get to, some sort of deep value backstop based on looking at this balance sheet. That is not the case, because a key aspect is looking at the PP&E, the property, plant, and equipment, and saying, hey, this is how much I think this could be. Now, another way to look at this is, sort of peeling the oranges by looking at different segments and saying, okay, well, is it possible that you have a lot of profits in, let's say one segment, and then sizable losses in another, and then what happens if you just strip out the unprofitable segment? And you do have an element of that here. It's complicated though, but if you see Intel Products operating income was $2.9 billion during the most recent quarter, $2.5 billion the prior year. So that is an impressive growth, but it was offset by the losses in the foundry business, losing an incremental $1 billion. And they do have sizable corporate unallocated expenses that would need to be offset against this profitability. So you could, if you were to say, hey, maybe in the future, Intel Products could be generating, $10 billion in profitability. If you could have that, maybe $5 to $10 billion, then maybe you could justify the valuation, but then you'd have to make sure that this foundry line item gets back to break even or better. So in that case, you could start penciling out, okay, maybe there's some sort of valuation backstop, but you need to have real confidence that these segments, client computing group, data center and AI, network and edge, actually hold up in value over time. They do have these other segments as well, but they're generally much smaller, as you can see. So this is, roughly how I'd want to, these are the questions I would want to think about. I go to AI Ticker Chat oftentimes to get a preliminary look at the valuation, and it's saying, hey, there could be potentially huge upside, but I think it's actually off. I think the AI is blowing a circuit here because it's assuming 8% annual growth, 35% margins, 20 times multiple. The 20 times multiple might be reasonable if they're able to get back to a period of growth. But right now, you're just not seeing it. And the 35% margins, in my opinion, don't make sense given, that they're currently in a sizable loss. And so I just look at this and I think it's just too risky thinking about Intel, partly because of the history, partly because it's very difficult to navigate this dance of using their own foundry for their products and making sure and catching up with some very competitive producers of semiconductors. So I think this is just, for me, it's too hard. Could it work out? Maybe, but it's you don't have that true valuation backstop. I don't think you do. Now, there are companies, if you look hard enough, where you can have that sort of valuation backstop, where you could say, hey, this is trading at book value. And by the way, there are other companies that would pay 1.3 times book value or more, and therefore paying book value is really cheap. So there are situations where looking at the book value, the stated book value of a business could make a lot of sense. But for something like Intel, it really actually depends on the future and this faith that, hey, the tens of billions of dollars that are being invested in their facilities, that can actually turn things around in the future. If this video has been helpful for you talking about Intel, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.